Welcome back to the deep dive. Ready for a wild one?
Oh, yeah. Buckle up.
Today we're going back to Tuesday, January 21st, 2025.
Big day.
Inauguration Day.
Yeah, lots of buzz around this one. Golden Age talk and
Some pretty big market moves, too.
definitely kept investors on their toes.
You guys sent us a ton of stuff from Benzinga's pre-market playbook live stream.
Tons.
So much to cover.
Absolutely a lot to dig into.
But luckily,
We have the charts.
you got them.
We got the insights.
And hopefully a little bit of calm amidst the storm.
Well, we'll see about that.
Let's set the scene. Trump's back in the White House second term, kicking off with this whole golden age talk.
Right.
Was the market buying it?
Well, let's see. The S&P 500 futures were green across the board.
Okay.
Dow futures were up. NASDAQ Q was up.
It's looking good.
Definitely some volatility in the air, though.
You flagged something called a pro gap in the S&P 500 chart.
Right.
Can you break that down?
Yeah, so remember that CPI report the week before caused a significant price jump in the S&P 500.
Yeah.
That's what we call a pro gap. Think of it as like a sudden burst of optimism. You know, the market woke up and smelled the coffee.
Maybe the inauguration cake?
Maybe. Or the inauguration cake. Yeah, exactly.
So gap like that, though, also means things could get a little bumpy.
Right?
Okay.
Exactly.
Huh.
Scott Redler, trader over at T3 Trading, had some smart advice on this. He suggested placing stops below the low of the day,
Okay.
the day that the gap happened, kind of like a safety net.
I like a safety net.
So you can participate in the potential upside without risking a major wipeout if things turn south.
All right. Smart.
A smart man.
Speaking of wild rides, Bitcoin had quite a weekend.
Oh, yeah, it did.
Topped out at a whopping $108,000.
Wow.
But then we saw MicroStrategy stock dip because Trump didn't mention crypto in his inauguration speech.
Right, right.
What's your read on that?
Well, it's kind of a mixed bag. You know, you've
Yeah.
got the Coinbase CEO, Brian Armstrong. He's feeling pretty optimistic about the new administration's stance on crypto. He thinks maybe there might be like a more favorable regulatory environment than the previous term.
Mm-hmm.
But on the other hand, silence can be deafening, right?
Yeah.
Lack of a clear crypto policy from the administration definitely left some investors feeling a little uneasy.
So maybe wait and see for now for crypto.
For now, yeah, I think that's wise. Just remember, clarity and consistency in regulations can be a major catalyst for growth in emerging markets.
Right.
And crypto is no exception.
For sure. All right. Let's move on to some specific stocks that had everyone talking about. You highlighted rumors of a potential Intel buyout.
Right.
What's the scoop there?
Well, you know, Intel's been having a little bit of a rough patch. Their stock INTC has been struggling.
Right.
And that's kind of fueled speculation that they might become a takeover target.
Okay.
Interestingly, Citi even lowered their price target on Intel to $21 from $22 to,
Huh.
which some people are interpreting as a little bit of a hint at a possible acquisition.
Interesting.
Yeah.
And what about Apple? They faced a rare downgrade.
They did, yeah. Bank of America analyst Wamsi Mohan downgraded Apple AAPL from buy to neutral and slashed their price target to $160 from $185.
Big cut.
Big cut. He's concerned about slowing iPhone demand and falling revenues.
Apple's got a pretty loyal following, though. Do you think this is going to spook long-term investors?
Hard to say for sure, you know, but remember what Trump hinted at in his inauguration speech?
What was that?
He talked about, like, a massive investment in great American companies.
Oh,
So could Apple be one of them? You know, it's something to keep an eye on for sure.
it's like a game of market chess, isn't it?
It is, yeah.
Speaking of strategic moves, we can't forget about Nancy Pelosi, a.k.a. Nancy Bosi, and her stock picks.
Of course not. She always makes headlines.
What was she up to?
Some bold moves, especially in the AI sector. She disclosed the purchase of 50 January 2026 call options in Tempest AI TIM,
Wow.
which sent their stock price soaring.
So she's bullish on AI.
Mm-hmm.
What does that tell us about the broader landscape?
It definitely signals that AI is no longer a futuristic fantasy, right? It's becoming deeply integrated into various industries.
Yeah.
And investors are definitely taking notice, and it's not just the established players either. We're seeing smaller emerging AI companies like Tempest AI attracting big-name investors and sparking some serious market interest.
So takeaway for our listener here.
Yeah.
Should they be diving headfirst into AI stocks?
Well, like any investment, it's important to do your research and understand the risks involved, but AI is clearly a sector with enormous growth potential.
Okay.
The World Economic Forum in Davos was buzzing with AI talk. 58% of executives saying they plan to adopt generative AI solutions this year.
Wow, that's a big number.
It is,
So maybe not a headfirst dive, but definitely worth dipping a toe in the water.
For sure.
Before we move on, I got to ask about the elephant in the room, or should I say the blizzard in Texas. Our resident Texan 13 was braving the unexpected weather while still keeping a close eye on the markets.
He was a trooper.
Get a kid.
He flagged some interesting movers in the energy sector, actually. Helios Medical Technologies, HSDT, saw a nice jump after exceeding enrollment targets for their stroke pivotal study.
Oh, wow. That's great news for the company and potentially for stroke patients, too.
Absolutely, yeah.
What other energy stocks were on 13's radar?
Well, Innovate V received FDA approval for their super accurate kidney functioning testing system.
Okay.
That's a big deal in the medical device world.
Big deal. And it seems like the drill, baby, drill sentiment was alive and well,
It was.
especially with those freezing temperatures.
Yeah, especially across the U.S. Tetra Technologies, California-focused oil and gas company, saw some upward movement, probably driven by that combination of cold weather and renewed focus on domestic energy production.
All right, speaking of things that are near and dear to our hearts and stomachs, let's talk about Costco.
Okay.
There were some strike rumors swirling around,
Right.
leaving investors wondering if they should be stocking up on more than just bulk groceries.
Right. Well, the Costco Teamsters did vote to authorize a U.S.-wide strike. But it's important to note that an authorization doesn't guarantee a strike will actually happen.
Okay.
Negotiations are still ongoing, and a strike wouldn't even start until February 1st after the current contracts expire.
So should our listener be worried about a Costco run?
Well, the market didn't seem too concerned. Costco's stock, Costcat, was actually trading a bit higher despite the news. However, there is one thing to watch out for.
Okay, what's that?
We noticed a potential Batman head and shoulders pattern forming in Costco's daily chart.
A Batman head and shoulders. That sounds ominous. What does that even mean?
Picture the classic head and shoulders pattern,
Okay.
but with more pronounced pointed shoulders, kind of like Batman's cowl.
Okay.
It's a rare but potentially powerful bearish signal.
Oh.
Now, this doesn't mean you should dump your Costco stock just yet,
Okay.
but it's something to keep an eye on.
Okay, duly noted. Now, I know a lot of our listeners are fans of Netflix, United Airlines, and Taiwan Semiconductor. Can you give us a quick update on those companies?
Sure, Netflix NFLX is actually reporting earnings tonight.
Oh, wow, big night.
Yeah, and there's a lot of buzz about their subscriber growth and content strategy.
Yeah.
Option activity is hinting at a potential move towards $980 if they exceed expectations.
Interesting. And what about United Airlines?
United UAL also has earnings coming up soon,
Okay.
and their performance will be a good indicator of how the travel industry is faring. Option pricing suggests that a move towards either $117 or $100 is on the cards.
Okay, big swings.
Yeah.
And lastly, we have Taiwan Semiconductor TSM, the chip-making giant. They recently had a fire at one of their facilities, but their stock has held up relatively well. Any thoughts on how our listener might approach this one?
Given the recent volatility and upcoming earnings, an iron condor strategy might be a good option. Now, don't worry, we're not going to throw you into the deep end of options trading without a life vest.
Appreciate that.
We'll explain exactly what an iron condor is and how it works later on, but the basic idea is to profit from a period of price stability.
Yeah.
Which could be the case with TSM right now. A spread centered around the $200 strike price might offer some attractive potential.
Interesting. All right, we've covered a lot of ground here.
We have.
But I'm sensing there's still a whole universe of information to explore.
Oh yeah, just getting started.
Let's take a quick break and then come back to dive into those exciting space stocks and the world of quantum computing. What do you say?
Sounds like a plan we've got a lot more to unpack.
All right.
We're ready to blast off into the world of space stocks and quantum computing.
Absolutely. This is the kind of stuff that gets my imagination going. Let's start with Rocket Lab, RKLB. Their stock has been on an absolute tear. What's fueling this rocket ride?
Well, for one, they're getting a lot of love from analysts. Citi just raised their price target to $35 from $22, and there's a lot of buzz around their Neutron rocket, which is designed to compete with SpaceX.
So it sounds like they're not just launching satellites, they're launching themselves into a whole new league.
Exactly, and it's not just about the technology, it's about the bigger picture. The space economy is booming. With more and more companies and governments investing in space exploration and related technologies,
Right.
Rocket Lab is perfectly positioned to capitalize on this trend.
And alongside Rocket Lab, we've got Viasat VSAT riding high after securing that NASA contract for near-Earth orbit satellites.
Huge win for Viasat, this contract.
Yeah.
Shows that they're a major player in the satellite communications market, and it highlights the growing importance of space-based infrastructure
For sure.
for everything from Earth observation to global internet access.
It's amazing to think that something like global internet access could hinge on companies like Viasat. Now let's shift gears to a different kind of frontier quantum computing. It sounds incredibly complex, but incredibly exciting too. Can you give us a crash course?
Okay, so think of it this way. Quantum computing is like having a superpowered computer
Okay.
that can solve problems that would take classical computers millions of years to crack. It's all about harnessing the bizarre laws of quantum mechanics
Right.
to perform calculations in ways that were never possible before.
Okay, so it's not just about faster processing speeds. It's a completely different way of computing altogether.
Exactly. And the implications are huge. Quantum computing has the potential to revolutionize fields like drug discovery materials, science, artificial intelligence. The
Wow.
list goes on.
You mentioned two companies that are leading the charge in this field, D-Wave, QBTS, and IonQ, IONQ. What are they up to?
So D-Wave has been making waves by challenging NVIDIA's CEO Jensen Huang on his views about quantum computing.
Bold move.
They're focused on developing practical applications for their quantum computers, and they're attracting a lot of attention from investors and industry experts.
Okay, so a little bit of healthy competition in the quantum realm.
Definitely. And then you've got IonQ, which is taking a different approach to quantum computing based on trapped ions. They've partnered with big names like Microsoft and Amazon Web Services, which shows that their technology is being taken seriously.
For sure. It sounds like there's a real race to unlock the potential of quantum computing. What's your take on the investment landscape in this sector?
Well, it's still early days.
Okay. But the potential is enormous of air. Investors who are looking for long-term growth opportunities
Right.
and are comfortable with a certain level of risk might want to consider dipping their toes into the quantum waters.
So maybe not a full cannonball just yet, but definitely worth keeping an eye on.
Exactly.
Now, I want to circle back to some of the specific trades and strategies that were discussed during the Benzinga pre-market playbook live stream.
Okay.
Remember those option strategies we mentioned earlier?
You mean like the iron condor and the butterfly spread?
Those are the ones I'm all ears.
Okay, so let's start with the iron condor.
Okay.
It's a neutral option strategy that's designed to profit from a period of price stability or limited movement in the underlying asset. Think of it like setting up a net to catch a fish
Okay.
that's swimming back and forth in a narrow channel.
Okay. So you're essentially betting that the price of the asset won't move too much in either direction.
Exactly. And it can be a great strategy when you're not sure which way the market is going to move.
But you believe that it will stay within a certain range. Now, the butterfly spread is a little different.
Okay.
It's also a neutral strategy.
Wow.
But it profits if the underlying asset stays close to the middle strike price at expiration.
So it's like betting that the butterfly will land on a specific flower.
That's a great analogy. And the beauty of the butterfly spread is that it's a limited risk strategy.
I like that.
You know exactly how much you can potentially lose up front.
Okay, I'm starting to get a feel for these option strategies.
Yeah.
Now let's talk about some of the broader market trends that were influencing investor sentiment on this particular Tuesday.
Okay.
One theme that stood out was the rotation from growth stocks to value stocks. What's driving that shift?
It's all about changing economic conditions and interest rates.
Okay.
When interest rates rise, investors tend to favor value stocks,
Okay.
which are often considered more stable and less risky than growth stocks. Value stocks are like the tortoise in the race.
Okay.
Slow and steady wins the race, especially when the economic terrain gets bumpy.
So it's a bit of a back-to-basics approach.
Exactly. Investors are looking for companies with strong fundamentals, attractive valuations, and a history of paying dividends.
Makes sense.
These are the companies that are more likely to weather an economic storm.
And speaking of storms, inflation was another big concern on everyone's minds.
Absolutely. Inflation is like a silent thief, eroding purchasing power and putting pressure on corporate profits.
Right.
The Federal Reserve's efforts to combat inflation through interest rate hikes have created a lot of uncertainty in the market.
So investors are trying to figure out how to navigate this inflationary landscape.
Exactly. It's a balancing act. They're looking for investments that can outpace inflation, but they're also mindful of the risks that rising interest rates pose to the economy.
It's like trying to stay one step ahead of a moving target. Now, I know you had some key takeaways from the pre-market playbook live stream that you wanted to share. What stood out to you?
Well, one of the biggest takeaways was the importance of managing risk, especially in volatile market conditions. This means setting appropriate stop-loss orders,
Right.
diversifying portfolios, and understanding the risks associated with different asset classes and investment strategies.
So it's all about protecting your downside and not letting emotions get the best of you.
Exactly. Another key takeaway was the importance of staying informed and adapting to changing market conditions.
Right.
The market is like a river. It's constantly flowing and changing course. You need to be aware of the currents and adjust your navigation accordingly.
That's a great analogy.
Yeah.
So how can our listeners stay ahead of the curve and make informed investment decisions?
Well, one way is to use resources like Benzinga Pro,
Okay.
which provides real-time market data, news, and analysis. It's a powerful tool for both traders and investors.
And I know you're also a fan of Seeking Alpha, which offers a wealth of information and investment ideas from a community of contributors.
Yeah, Seeking Alpha is a great resource for gathering different perspectives on the market. But it's important to remember that not all information is created equal. You need to do your own due diligence before making any investment decisions.
Always good advice. Now, before we dive into the next segment, are there any potential pitfalls that our listeners should be aware of?
Definitely one common pitfall is emotional investing,
Okay.
which is when you let fear or greed drive your decisions instead of logic and reason.
So it's all about keeping a cool head and not letting your emotions get the best of you.
Exactly. Another pitfall is chasing performance,
Okay.
which is when you buy stocks that have recently gone up in price, assuming that the trend will continue.
That's a recipe for disaster, right?
It can be. Past performance is not necessarily indicative of future results.
Right.
Stocks that have gone up in price are often overvalued and are at greater risk of a correction.
So it's all about buying low and selling high, not the other way around.
Exactly. And another common pitfall is failing to diversify your portfolio.
The old don't put all your eggs in one basket advice.
Exactly. Diversification helps reduce risk by spreading your investments across different assets that are not perfectly correlated. It's a fundamental principle of sound investing.
Okay, we've covered a lot of ground here, but I feel like we've only scratched the surface. Let's take a quick break and then come back to explore some specific investment ideas and tips for navigating the market in 2025.
Sounds good. We've got a lot more to share.
All right, we're back and ready to dive into some specific investment ideas for 2025. Where do you think our listeners should be focusing their attention?
Well, given the trends we've been discussing, the electric vehicle EV market is definitely worth a closer look.
EVs seem to be all the rage these days. What's driving this surge in popularity, and what are some companies that are well-positioned to benefit?
It's a confluence of factors, really. You've got government regulations pushing for cleaner transportation, consumers demanding more sustainable options and advancements in battery technology, making EVs more practical and affordable. Companies like Tesla are obviously major players, but there's a whole ecosystem of companies involved in EV manufacturing, battery production, and charging infrastructure that are worth considering.
So it's not just about picking the next Tesla, it's about understanding the entire EV landscape.
Precisely. Another sector with a lot of potential is healthcare. It's a massive and diverse industry that's always in demand, and with an aging population and rising healthcare costs, the need for innovative solutions is only going to grow.
What are some specific areas within healthcare that you find particularly interesting?
There's a lot to be excited about in drug development, especially in areas like personalized medicine and gene therapy. Medical device companies are also pushing boundaries with new technologies for diagnostics, treatment, and monitoring. And then you've got the whole digital health space with companies developing apps and platforms that are transforming how we access and manage our healthcare.
It sounds like there are opportunities across the board in healthcare. Now, we talked earlier about the growing importance of sustainability and ESG factors. Are there any investment ideas that align with those themes?
Absolutely. Investors are increasingly looking for companies that are not only profitable, but also responsible and sustainable. This means considering companies that are reducing their environmental impact, promoting social justice, and adhering to strong corporate governance principles.
So it's about investing in companies that are doing well by doing good.
Exactly. And the good news is that there are more and more companies that are embracing ESG principles and demonstrating that profitability and sustainability can go hand in hand.
That's encouraging to hear. Now, before we wrap up, I want to touch on some final thoughts and recommendations for our listener. We've covered a lot of information today, and it can be a bit overwhelming. What are some key principles that they should keep in mind?
One of the most important principles is to have a sound investment strategy and stick to it. Your strategy should be based on your financial goals, risk tolerance, and time horizon. It's like having a roadmap that guides your investment decisions even when the market gets bumpy.
So don't just jump into the market without a plan.
Exactly. Another key principle is diversification. Remember the old adage, don't put all your eggs in one basket. By spreading your investments across different asset classes, you can reduce your overall risk.
It makes sense. And what about staying informed and adapting to changing market conditions?
That's absolutely crucial. The market is constantly evolving, and what worked yesterday might not work tomorrow. You need to stay up to date on news trends and economic data and be willing to adjust your portfolio as needed.
So it's all about being proactive and staying ahead of the curve.
Exactly. And if you're feeling overwhelmed or unsure about how to navigate the market, don't hesitate to seek professional advice from a qualified financial advisor.
It's always good to have an expert in your corner. Well, we've covered a lot of ground today, from the inauguration buzz to Bitcoin's roller coaster ride, from the potential of space stocks to the complexities of quantum computing. It's been quite a journey.
It has indeed. Hopefully, our listener feels more informed and empowered to make smart investment decisions.
Remember, this was just a taste of what's out there. We encourage you to dive deeper, do your own research, and never stop learning. The market is full of opportunities, but it's also full of risks. By staying informed, managing your risk, and developing a sound investment strategy, you can navigate the market with confidence.
And don't forget, we're always here to help. If you have any questions or topics you'd like us to explore, just let us know.
That's right. We love hearing from our listeners and learning alongside you. Until next time, happy investing.